Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of August 26, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was a wild ride for mortgage rates. The bond market was selling off, recovering, selling off. It's a crazy ride. If you take a look at the bond chart on the screen, you can see the previous week bonds sold off, long-term trend, rates moving higher. Monday we continued that sell-off, but then Tuesday recovered. And then Wednesday, sold off again big time. Thursday recovered some, tried to hammer on a bottom. And then Friday, finished the week with a big rally to end the week right about where we ended the previous Friday. So mortgage rates, after this long, crazy ride, ended the week right about where they started. We are going to recommend floating your Delaware mortgage rate to start the week, as we want to see if we can build on Friday's momentum with the bond closing with a huge run-up. Now, if we dig into the reports, what caused this wild ride last week? Well, the first thing was we saw on Thursday the weekly initial jobless claims jumped higher by 13,000 claims up to 336,000 claims. So that was not expected. They were expecting jobless claims to remain lower. So that helped the bond market rally because, again, bad economic news is good for the bond market. And then the rally followed through on Friday. And what happened on Friday was new home sales disappointed. We'll talk about that in a minute. And that helped the bond market rally higher. So if we look in the housing news, the first report we saw last week was existing home sales increased by 6.5% from July of 2013. In July of 2013, up from June. And that was 5.39 million units sold for July. And you can see it was only 5.06 units for June. Now this is a 17.2 increase in the number of homes sold from July of 2012 to July of 2013. So you can see strong housing recovery still continuing. The Federal Housing Finance Agency reported last week that home prices rose by 7.7% from June of 2012 to June of 2013. They also reported that home prices increased by 0.7% from May of 2013 to June 2013. Now, the disappointing report came on Friday. That was new home sales actually declined by nearly 14% from June to July to the lowest level in 9 months. Media was going nuts about this, but we expected this. When the home loan rates started going up in May into June, people kind of jumped off the fence, got under contract May and June. So that pulled a lot of people that probably would have been buying in July into June and May. Rates were higher going into July, so people weren't buying as much. We expected this, and we saw with the drop in mortgage applications in July. So it was definitely predictable. Media's acting like it was a big surprise. We knew this was coming. Basically, new home sales fell to 394,000 units, annualized below the 485 expected. And they also revised June lower to 455,000 from 497. So the rise in home loan rates basically kind of caused this. But the good news is August looks like to be a rebound month. Mortgage applications are up. New housing starts from builders are up. Building sentiment is up. So all that says we're going to have a rebound from July's low numbers in August. And remember, July was low because people jumped up that would have normally bought in July to May and June. So we're not worried about the new home sales dropping. We were expecting that. In economic news, the Federal Reserve released their minutes on Wednesday and threw the market in a tizzy. Bonds, stocks, and commodities all sold off. The reason why is Feds didn't get any clear direction on whether they're going to start the bond buying or asset tapering program in September's meeting or push it out to the end of the year before they start tapering. Now we're predicting from all the evidence we're looking at that the Feds are going to start tapering their bond buying program QE3 in the September 18th meeting. They said they're going to start at some point this year. If they start in December meeting, it won't happen until next year anyway, so that's not a good meeting. And the 18th, the meeting is no press conference, so they're going to probably have to do it in September. But they're going to start, and some of the members have said this, they're going to start by stop buying or dropping how many treasuries they're buying. They're going to keep the mortgage buying program probably the same and start by tapering the treasury. So that won't directly affect mortgage rates. And then also, even though the Feds may be pulling back, the supply of mortgages is dropping as the rates go up because all these mortgage refinance loans have been coming through they're not there. The refinances are drying up, so the supply of mortgages coming on the market is going to drop as the Fed start tapering, so we don't think there'll be a noticeable effect on the bond program, and we also think stocks will sell off as the tapering program begins because they've been high on this Fed buying program. So we'll keep you updated on that, but there was some real big news that just came out. HUD announced a new FHA program called Back to Work. Great program. It's for people that experience a short sale, foreclosure, or bankruptcy that was a result of extenuating circumstances from the loss of a job or a drop in income by at least 20%. The huge news is it drops the waiting period down to 12 months. If you had a short sale or foreclosure, you're probably looking at a 3-year wait. Chapter 7 bankruptcy, it's a 2-year wait. That's all dropping to 12 months if you can prove you had a job loss or a drop in income by 20%. We have all the details in a post on DelawareMortgageLoans.net, so you can go there and read that. Also have a video for you, explains everything, how you qualify, what the program is. So definitely look into that. If you short sold or foreclosed 12 months ago, you may be eligible for a new FHA loan now. In the local news, the next free first-time homebuyer seminar in Newark is Saturday, September 14th. That's from 10 a.m. to noon. That's in Newark at the Christiana Hilton Hotel. The next one in Dover at the Holiday Inn is September 28th. And again, that's from 10 a.m. to noon. You can register for either one of those by giving us a call in the office at 302-703-0727 or online, www.DelawareHomebuyerSeminar.com. Look forward to seeing you guys next week.